Okay, good afternoon, everyone. I'm very excited because we have a brilliant lineup of panelists, very formidable. I think in combination, I think we have someone from the investor group. We have, of course, directors, representing directors. We have Michelle Lim, and of the Dr. Nomazila, of course. She is presently the independent non-executive director of CIMB Berhad. And of course, we have the Jonathan Lebray, who's also bringing us the international perspective, right? So without further ado, I'm going to ask them, to introduce themselves. But while we are going through the, to follow up from what Mano has presented, now we want to bring to life, how some of these the issues or challenges with IFRS S1 and S2 then can be addressed, and hopefully you are able to then take away some of the practical implementation considerations. So, and also to understand the views of the various different stakeholders. So perhaps I would like to get going with our panelists by firstly getting them to introduce themselves. I'm mindful of the time, maybe for the first time, maybe 1 minute each. Let's go with the ladies first, with Michelle, then Dr. Mamazilla, and then after that, we go with Dr. Ismet and then Jonathan. How about we go? Yeah, Michelle.
Good
Michelle,
afternoon. Thank you, Simon. Thank you, MIA, for having us all on this panel. And afternoon to everyone out there, all 414 of you, including everyone here. Very good afternoon. I just 1 minute on myself. I basically am a lawyer by profession. I was a chief sustainability officer in my previous organization, so I did manage a sustainability reporting for a global healthcare group. In my current role, obviously, as president and CEO of the ICDM, we obviously run, for one, the mandatory accreditation program for sustainability-related matters called LIP, Leading for Impact. So we're obviously there in the forefront, setting the tone in terms of capability, training, development, mindsets, etc., for board directors particularly, as well as aspiring board members. So people like yourselves in the audience, I suspect CFOs, etc., who are interested in a board career as well. So we do that. So we're very much involved in the sustainability scene and IR. And I do sit on the MIA Integrated Reporting Committee as well. Thank you.
Thank you, Michelle. Over to you, Dr. Nomazila.
Thank you, Simon. Good afternoon, everyone. Assalamualaikum. And it's my pleasure to be able to join the other esteemed speakers on this panel. I started my journey on integrated reporting, I think many years ago, and I think together with Simon, spearheading the awareness on IR since 2015, right, Simon? And then I sat on IR Framework Board, which is now, combined as IRCC by FRS, Foundation. And I also conducted training to help companies and organizations to prepare IR and SR, sometimes when there are requests. And currently I spearheaded or I influence or aspire IR and SR at the organization where I sit as a board. I sit as a board on a plantation company, on a bank, as well as Sustainable Energy Development Authority, which has produced their inaugural IR, I think in last year, and was already approved by the parliament. So that's another area that I'm active on, is to inspire IR adoption among the public sectors. And I can see more and more public sectors are preparing their IR now. Thank you. That's a bit about myself.
Thank you, Doctor. And the next person is Dr. Ismet.
Hi, thank you, Simon. Good afternoon. Assalamualaikum, everyone. I used to be with the Securities Commission before, where I was involved very much heavily on policies. policy development, particularly the Malaysian Code of Corporate Governance. So I was part of the team that was responsible for incorporating integrated reporting in the MCCG back in 2017, the first edition that we incorporated IR, and then the second one in 2021 as well, where we retained that practice. It was an interesting journey. We worked closely with MIA, and then I remember with Dr. Nomazila and yourself, Simon, and also we engaged Jonathan at that time on the development, trying to understand the new concept back in 2017. It's still new, it's still nascent, so trying to build that understanding, fundamentals, and trying to advocate that among our listed companies here. Now I'm changing hat from being a policymaker to a shareholder activist, taking lead in MSWG, where here we review and we analyze 500 listed companies where we are minority shareholders for each of these companies. We analyze their annual reports, their circulars, any corporate documents, and at the same time we raise questions if there's any issues that we found. Most of your company that you guys are an auditor or assessors technically may have received a letter from us. And we attend EGMs and any general meetings as well, where we then engage the board and raise questions. So last year, we attended nearly 530 general meetings, AGM, EGM, and even court convene meetings. We aspire to do that this year again, the same number, and we'll continue to assess 500 companies. So throughout this session, my feedback will be very much into all the other reports that we've read through, 500 of them every year, and we can share with you some of the gaps and some of the brilliant things that companies have done. Over to you back, Simon.
And last but not least, Jonathan.
Well, thank you, Simon, and thank you for the opportunity, and good afternoon, everybody. I'm Jonathan Lebray, and I lead the integrated reporting team at the IFRS Foundation. I think my journey to this point started probably 21 years ago when I joined the Institute of Chartered Accountants in the UK, and I helped the Institute to navigate through the challenges of the global financial crisis, and then joined the UK regulator and helped them to launch their corporate governance code and stewardship code in 2011. And then the IIRC, the Integrated Reporting Council, was established really in the aftermath of all of that turbulence. And it feels like we've been in quite a turbulent world ever since. And this webinar is called The Continued Relevance of Integrated Reporting. I would say that integrated reporting has never been more relevant to navigate the challenging and difficult period that we've been in. And for 10 years, integrated reporting was voluntary. It was a standalone project. It was dependent really on the goodwill of people to take notice of what we were doing and adopt. Today, we're part of the IFRS Foundation, so there's a real opportunity to navigate not just integrated reporting, but work out how the data and the standards fit with this framework for good governance, for integrated thinking. And that's what's exciting now, I think, about the next period in this journey of evolution in reporting and corporate governance. And it's a pleasure to join you today. Thanks, Simon.
Thank you, Jonathan. All right. Okay. So my duty as a moderator is then to draw up from all of you from the various perspectives that you have and the learning you have in terms of how our participants, which comprises, I mean, many of them are from boards, they are senior management, and basically how do we then, for those who are, in management and boards, how to then be able to drive and navigate the impending, requirements of IFRS S1 and S2, and then also consider the continued relevance of integrated reporting. And if they are already an adopter, how do they go about it? But if they are not an adopter, why still go into integrated reporting? So I think I will be covering a little bit more on the continued relevance first, on integrated reporting. Then I'll touch on some of the implementation challenges of going into the disclosures of S1, S2, and looking at some areas such as resource considerations, how to build capacity, and then and thereafter we will look at the pigeonhole questions. But Manohar, he spoke just now, but he didn't get to do the question and answer. So let's see if there are some questions for him. We can still get him back later, right? Okay. So the first question I'll pass over to Dr. Normazila. She has been, I've worked with her in terms of promoting integrated reporting, and she's now also an integrated reporting member of our integrated reporting committee. So as well as Michelle, right? So Dr. Normazila, I know that you're very passionate with integrated reporting. So perhaps if you can share with us, I think one of the favorite questions that I ask you as done together with you in some of our courses was that what is the difference between an entity that adopts sustainability reporting as well as integrated reporting? That means they include the sustainability disclosures within their integrated report versus an entity that just merely adopts sustainability reporting but not having integrated report. So that's the first question. And also, what is your advice? This is also a hot question. Companies are putting aside some of the plans, their initial plans of adopting integrated reporting because they are so overwhelmed with the enhanced sustainability disclosures in IFRS S1 and S2. So what is your perception or advice for these companies? Doctor?
Yeah. So first, I think let me just probably frame the discussion to the context of practice in Malaysia. At the moment, we can see there are probably 3 ways company present their sustainability statement, because what is required under our Bursa Malaysia listing requirement is the sustainability statement. So first, companies that probably have advanced where they prepare IR integrated report separately and sustainability report separately. So they do have 2 reports and plus the financial statements. If those are very big, then they will put in 3 statements, 3 booklet. And secondly, companies that probably prepare IR and they combine the sustainability statement, sustainability report into the IR, and they just prepare one report together with the financial statements included. And the third would probably prepare the normal report based on the requirement of Bursa Malaysia listing requirement. They only probably disclose all the required information, and then they will include a sustainability statement. Okay, but there's another category. They didn't prepare IR. They just prepare the statement based on listing requirement, the annual report based on listing requirement, and they have SR separately. And if you look at how it relates to each other, yeah. For example, imagine if the company prepare just annual report, and that probably, will have say 60 pages, but then they prepare a really detailed SR, sustainability report to the reader would then try to connect to understand how much of that sustainability impact the company as a whole. Yeah, because looking at the amount of information presented on the standalone sustainability report and then compare it to the annual report, and whether there is connectivity of both, then readers would probably may not understand, won't get the clear understanding on how that sustainability effort or how the sustainability matters impacting the whole organization. Okay, I think that is where sometimes if it's an analyst or other stakeholders that read, then they may not get the overall understanding. So this is where if you look at companies that prepared IR and then SR, and they went through the principles of IR, the fundamental concept, and then the content elements, yeah, and all the principles, you can see that they're already able to identify how sustainability fit within the overall value creation. And that's, I think, really bring the understanding to the stakeholders, to the shareholders, because sustainability sometimes may be misconstrued. The effort of sustainability implementation sometimes can be misconstrued as adding more costs. Okay, so in order to bring that right understanding and right appreciation of sustainability matters, we need to see how the strategy on sustainability fit into the overall strategy of that entity. Yeah, for a bank, obviously in the annual report, in the IR, we can see that there are a lot more information like liquidity, capital management, and all that. So how the sustainability fits into the overall banking operation can be seen, yeah, through the preparation of IR. Otherwise, you won't get the right understanding. I think that's really important, and that is also applicable to all other companies in all other sectors, because it's you can see the depth, you can see the proportion of sustainability matters uh, as compared to the whole organization, because sectors differ. If you look at plantation, for example, sustainability matters are probably taking most of the plantation activities, because it's about handling the carbon sink, handling the plantation activities, handling the capital, the labor, and all that. And it is more or less whatever the plantation companies are doing is all talking about sustainability, because it's also, for example, if oil palm is also, source of food and all that. So I think that's where the principle of IR, the IR framework itself, has actually prepared a very good grounding for sustainability information or sustainability disclosure. And because if you look back at where IIRC has started and where IR started, the main purpose for IR framework to be developed was to enable companies to share financial and non-financial, okay, in relation to their strategy, in relation to their risk management, in relation to their operating model, as well as their performance. So the basics are already there, set by IR framework. So when you have to report on your S1 and S2, and if you already have IR, it make it much easier because you already have that foundation. So perhaps I just stop there, Simon. Maybe we'll continue the conversation with more questions that you have.
Thank you, Dr. Mehta. So it's not about adding more initiatives, more costs into the organization, but linking all these initiatives into how it actually into the value creation of the organization, right? So I thought that is very enlightening, and also in terms of Dr. Mehta, what about those entities that think that perhaps they defer the IR adoption because they're now focusing more on enhanced sustainability disclosures under S1 and S2.
Okay, actually, the preparation of sustainability information requires a lot of integration between various departments, and you need data from all your operating departments, all your business units and business enablers. And while collating the data, the integrated thinking is really important. Yeah. And understanding how the data is impacting your strategy. Actually, if you defer it, and you pick it up later, you're probably getting a step back, because the first thing you should do is to have the integrated thinking, and via integrated reporting process, yeah, the process of preparing integrated reports will enable you also to connect information and to get data from various departments. So I think ideally, I would probably advise to go to do it together. Yeah. And then you can see how, the process of integrated reporting will help you with your sustainability disclosure. So I think that would be more probably useful for companies to go through the integrated reporting process and then add on with your sustainability information. Yeah,
Thank you.
because
Thank you,
IR
Doctor.
has the framework.
Yes.
IR provides the framework and process, and sustainability information is to be added on.
Thank you, Doctor. All right, okay. And now we go over to Dr. Ismet. I was very excited when you told us that you're going to share some of your findings of your 500 over companies, and I wanted to, you know, as you put before on globally on. I mean, looking at the global the movement of integrated reporting and you know how it has garnered the acclaim that you know over the years. But how do you then you know looking at the proposition that integrated reporting actually enhance the investors' confidence and decision making by providing insights into the company's strategy, business model. You're looking at value creation in a short, medium, and long term. So, what is your take and your consideration as you review all these companies in terms of the features of integrated reporting that are most valuable to investors and why? And
See, thank you, Simon. I think the biggest challenge that we had when we read annual reports, just imagine reading all 500 annual reports. There are a lot of annual reports, the traditional annual reports, where it pretty much being prepared to meet the requirements under the listing rules. So what I meant is that technically they prepared the basic MD&A, chairman statement, and then they have the sustainability statement that they have to prepare, the corporate governance statement that they have to include, and finally the financial statement. It's very segmental and it's very siloed, you know. So it's like pretty much just reporting after reporting everything. And every year once we report, it's like you can just catch, yeah, this is the same words being used year in, year out, and it's going to be the same. It's so boring reading the annual report, some of the annual reports. The problem with integrated reporting is that it now sets a very big benchmark between those who adopt integrated reporting and those that did not adopt integrated reporting. You can see a stark difference. Why I say it's a problem is that then we felt like, oh, for those who adopted integrated reporting, we can understand thoroughly what the business model is and where they are heading, and also how they're going to manage all this business model together. So there's clarity in terms of the whole entire model plus the value creation process. Comparing to those who did not adopt and those who are really preparing the annual report just to meet the bare minimum requirements, it's a real struggle for us to understand the actual business model and the actual business strategy and where they're heading to. So that's always our concern and always our bugbear, and always how we always try to raise this issue with companies so that they can start to see the value of having a more structured way of approaching corporate reporting. You see, compared to financial reporting where you have standards and you have basis of preparing those financial statements, it is now important that companies now move and shift towards adopting a more strategic approach in preparing their corporate reporting, particularly the annual reports. This morning, for example, I've attended EGM where the company is doing capital reduction. We raised a concern because we wanted to know what is the company strategic focus and what will be the plan that the company have moving forward as well. And how they're going to utilize their funds as well as their business segments more extensively. The problem that we had is that because there's so much of over-reliance on one business segment and one business model, that is causing or triggering the issue whether or not the company did actually plan moving forward and the plan that they're going to have to ensure that they are able to sustain. We don't want this issue about capital reduction again coming to shareholders for approval. We don't have that good feedback from the company. I guess that also clearly shows that the company is not really thinking ahead where they're going to pursue and what is the actual plan. Because contract ends in 2 to 5 years. Most we have one in 7 years coming in. So how the company wants to think about moving forward, that is where I think the whole entire framework of discussion needs to be more bring more clarity to the shareholders for us to understand and for us to appreciate where the company is going to head to. There are a few features of how integrated reporting actually help a lot, especially for us as minority shareholders. Of course, like I mentioned, it's clarity of business model. It provides that understanding at a very basic for where we are heading in terms of the direction of the company, and how it then integrates throughout the whole entire value creation, as well as how it integrates your strategy, your risk, your governance, and finally your performance. And of course, not to forget now your sustainability as well. And that fact of having that forward thinking and forward looking orientation is very much important, because again, we do not have much information other than your annual reports and other than your corporate reportings, other corporate reportings, the circulars, and etc. So annual report is a very important tool for us to make an informed decision as shareholders. So that level playing field, that parity of information that the company have and us as shareholder have is very much important. So that's the reason why we always push for companies to look into integrated reporting, try to adopt integrated reporting as much as they can, if not at the fullest, but at the very least being guided by integrated reporting and move towards this direction so that they can improve further. I think it's very much important, and that's something that we will continue to push here at MSWG. Back to you, Simon.
Thank you, Dr. Ismet. I like that you mentioned that there's a stark difference. Wow, that's quite a statement that you really can see the value of an integrated report. And you mentioned about the clarity of the business model, and also the integration of strategy with value creation with strategy, performance, right, and including consideration of sustainability matters. Right? Of course, one keyword is connectivity of information, which we will touch on a little bit later. And also in terms of, would like to share that you did also mention, I think one of the keywords you mentioned was actually strategy, the strategic approach that you can actually find in the report, and also the future orientation. Generally, the annual reports are going to future orientation, but integrated report actually goes in the short, medium, and long term. It's just looking at a wider, further dimension, right? Okay, so now we have Michelle, of course. We would like to discuss with you in relation to corporate governance. We know that the code, as Dr. Ismet mentioned in the first round, the previous code, and also in 2021, the adoption of integrated reporting is a recommended practice for large corporations in their engagement with stakeholders. How does integrated thinking and reporting enable directors to better discharge their responsibilities? Also, please also highlight some of the strongest merits of adopting integrated reporting.
Thank you, Simon. If I can just go back a little bit, how, the way a board has evolved, board membership, how it has evolved from the days of being, a retirement remote, etc. When corporations were just looking at senior people to just sit at the top, right? All that has changed, right? It has changed, 180 degrees. Likewise, also similarly, I was going to say, for the way the company tells its story, shall I say. I don't like to say annual report. It is a requirement, yes. And because over the years, it's become this thing where you have to report every year. It becomes very static, right? And a bit too embellished at times. And then you have awards, etc. And it just kind of defeats the whole purpose. I strongly believe that the company needs to internalize a lot of their practices, which is good. Obviously, IR, adopting sustainability, all of that, those are good practices, but it's not for purposes of just disclosure, right? You need to internalize. And that's why we talk about, yes, integrated thinking. It has to start from the thinking. So the thinking for a company is at the top, is at the board. Internalizing it is throughout the operations. How do you tell your story if what you're talking about is not truly internalized? And then you go into greenwashing. So again, there's obviously a lot of good in terms of integrated reporting, because it teaches you how to draw on your various capitals, to see the value creation. That obviously feeds into sustainability, as Dr. Mazila and all of us know, has said, and all of us know, is that it makes it easier for you to do your sustainability reporting. And you can see what's coming in terms of sustainability reporting already, right? So, I highly, highly recommend and suggest that companies do start adopting integrated reporting, as that would greatly help them if they haven't already. Again, but bottom line is content over form. Whatever your story, however you tell your story, it's got to be a compelling story, because that impacts the outcomes, it impacts your value, right? And therefore goes to your reputation and performance. So it's all linked. Financials, non-financials. So board, and we do teach that, and in our programs, obviously, we talk a lot about internalizing. Yes, there's a lot of disclosure, and yes, for example, LIP, we do, because it is a 2 full day training, we have to tell you, starting from what you need to disclose, but ideally it should be internalized. And start with your risk-based gap analysis. Look to see where your material issues are and start. At least you're starting and you're telling the story over time. That already builds credibility and trust with your stakeholders. I'll probably stop there for now. There's obviously a lot going for integrated reporting and into sustainability reporting. There's no reason not to adopt that.
Thank you, Michelle. So I like that you mentioned about internalizing. It's not just merely of reporting, but looking at what is inside, and also the importance of thinking. And you mentioned that thinking starts with the board, right? And I like that. And also you mentioned about content over form, right? So so we take that with me. Now over to Jonathan. All right. So Jonathan, you have moved from different organizations, and your titles. I sometimes I have difficulty remembering what is your latest title, right? But actually, anyway, it's interesting. Thank you for joining us from the UK. With IFRS S1 and S2 introducing structured sustainability disclosures, this is global baseline for the first time is going to be truly global. And then also with the evolving global regulations and expectations, how can integrated thinking enable companies to not only stay ahead of compliance, but also strengthen their competitive edge, and also long-term value creation? Perhaps you could tell us also how integrated reporting enhance the overall corporate reporting and present a more holistic view of an organization. Jonathan? Yeah.
Great. Thank you, Simon. And it's a great pleasure to be on such a distinguished panel today. Wonderful to work with MIA and you again, and also with Dr. Namazilla, who we've known each other for very many years. And it's a pleasure to be on the panel with everyone today. I would agree pretty much with everything that has been said so far. And it's wonderful to hear the kind of business case for integrated reporting be articulated so strongly. I think if I was to bring an international perspective and just look at some of the trends and how they may impact and be useful to our audience today, I think we're moving from a period where corporate reporting has been dominated by complexity, and we often hear the criticism about the alphabet soup, too many standards, too many frameworks. And I think that's led to a compliance mindset in companies, in how they're applying standards and even how they're applying integrated reporting. Too often people want to know what the report looks like, rather than, as has been said today, what the process is internally that gets you to that report. And so I think we're moving now to a period where, with integrated reporting, with some of the consolidations that have happened, where we're bringing together organizations and where we're trying to use the standards that have been applied over many years and frameworks like TCFD and the SASB standards and integrated reporting, and trying to just bring them together. I think we're trying to bring about a world of greater coherence, where companies can move from compliance to communication about their value creation. And that is the differentiator between companies that are using frameworks and standards almost as a crutch and just to comply and do the bare minimum, and those companies that are using frameworks and standards, using integrated reporting as the architecture and using the standards to provide the content for that reporting. And it's having dramatic effects. It's having dramatic effects in terms of the ability to retain talent and recruit talent. We are in a global war for talent. at the moment. And if you can differentiate, not just through the storytelling, which I think is critical, but also through that integrated thinking where you're breaking down those internal silos, you're getting the functional units within your organization to talk to one another. You're bringing coherence to the development of your strategy and your business model. And you are getting on top of the internal processes and systems, working out what is the role of the company secretary, what is the role of the finance team, what is the role of the internal sustainability team, what is the role of governance, and how do they fit together to build that coherent strategy and business model. That is the really powerful part of integrated reporting, because it's about change management and it's about changing the internal wiring. And it isn't about flicking a switch to go from one report 1 year to another. It is a multi-year process. There's never perfection with integrated reporting. It is a continuous process of improvement. And so I think the question that I would be asking Simon is, are you in control as a company? Do you feel in control of your information? And if not, choose integrated reporting and integrated thinking because it provides you with that structure, that architecture. Do you operate in a business where there are too many silos, where you feel that there isn't one strategy and one business model? And there are, we all know that there are exercises that businesses can do to determine whether they are operating on an integrated basis or not. We can talk about that. Because what ultimately the quality of your report will reflect is the quality of your governance. How is your business managed? How is your business governed ultimately? And this is where integrated thinking can provide real opportunity and real benefit for you. And finally, Simon, I would just say on the advantages of doing this, what is the business case? Well, we found not only do companies that are doing this attract the highest talent and retain that talent, which is a really important competitive edge. We find that companies that are applying integrated thinking also attract longer-term investors and longer-term stakeholders to their business. In a world of volatility, this is really important. And I think finally, it leads to a much better and more efficient allocation of capital within the business. So where are you investing? Where are you allocating your own resources? If you know what your business model is and your strategy, and if you have a handle on your data and improving the quality of that data to evaluate your performance, then you can allocate resources much more efficiently and much more effectively. And I think we are going to be operating in a world in the future where AI is coming, technology is coming. It is going to disrupt reporting in some ways, but it's going to help because I think it will help to drive the connectivity or enable the connectivity of information and data. But what technology won't enable is the ability of a business to understand its story and understand how it is creating value. And I think we should focus as much on getting to grips with the science, if you like, of data and the quality of data. We should be focusing on that, of course, but we should also be focusing on the art of storytelling, of connecting that data to the strategy and to the business model, because that is how investors will be evaluating the value of your business, taking the data and the story together, because that will determine ultimately your value creation model. And that is where we end, if you like, with integrated reporting, is telling that value creation story that enables investors to understand your business and to invest in you for the long term. I'll leave it there, Simon.
Jonathan, sorry, Simon, could I just ask you one question? In your experience, because we've come across this where, an integrated reporting, I completely agree, it just, enables that internal cohesion, right? And a result of which we see is that everyone's aligned, because we find sometimes the less, shall I say, or the more junior functions find they're not aligned with the vision. They don't know what's going on. But the minute you're doing that, you're aligned. Doesn't that improve the culture as well of the organization? Do you see that?
Oh, it hugely improves the culture. Okay. It improves the culture. It improves the incentive systems within the business.
That's right.
You can have KPIs that can cascade through the business. You have the same KPIs. It's amazing, Michelle, we talk to businesses and every department will have different KPIs, often a different strategy. There's no coherence. That's and right. It's really demotivating internally if you're a team. And actually quite a lot of the sustainability world, CSR world, reporting world starts actually within functional units. And if there isn't that connectivity, it's really demotivating because the teams can see the value of what they're doing, yet it isn't recognized through the business. So this kind of, if you like, really does cut across that. And it's absolutely a cultural change and an improvement to the culture to have that shared understanding of the
and it's
value
part of the
creation model.
stakeholder building as well. Yep. Yeah.
It really does. Yeah, it's a really good point.
Thank you, Jonathan. Thanks, Michelle. Yeah. So, you mentioned from compliance mindset to greater cohesion. I like that point. Compliance to communication, from having the frameworks or standards as a crutch to having an architecture where you are able then to do the reporting. And I like the point that it's a business case, right? There is a business case for having integrated reporting. You have better experience with the talent, retaining talent, change management. You have a longer term investors, and then also more efficient allocation of capital. All right. Okay. Before we go on to the next section of this of our discussion, will be on looking at implementation of S1 and S2. For IFRS S1 and S2, if you look at the standard itself, it's described there that it's actually designed to meet investors' need for more useful information. So do you agree that these standards enhance the quality and relevance of sustainability disclosures? And according to a recent global survey by PwC, that's in 2023, 2 years back, 75% of investors actually consider the company's management of sustainability-related risks and opportunities to be a key factor in their decision-making. What would be your expectations now? We're going into an era where we're going to see these disclosures in the report. What would you look for when you look at companies' first report in compliance with IFRS S1 and S2? And now, what key elements or insights would you consider to be important to investors?
Thank you, Simon. If we look back at our journey on sustainability in Malaysia, I think it's something that we can be proud of. I mean, we transitioned from a merely CSR type of reporting, even back in 2015, where we started to look on SRF, the Sustainability Reporting Framework. And then we gradually improve, and then we had SRF 2.0, the one that we are now implementing. And most recently, now that we have an SRF, that shows the national commitment towards this agenda and how important it is, not just on the perspective of the regulators, but also companies as well as the investors. So I think there's very much alignment between the three and how we are looking at this as a country and trying to improve our management of sustainability-related matters. So coming to the new NSRF, where we adopt S1 and S2, definitely, I strongly believe that it represents a significant step forward. It's something that will change. It's a game changer as well in terms of how we approach and manage our sustainability reporting matters, and how companies look into sustainability as part of their whole entire business model and business strategies. We had a period where we had to do SRF 2.0, like I mentioned, where we have common sustainability matters that were introduced, and that helped to very much bridge that gap in terms of understanding how companies are looking into sustainability matters. It helped nudge companies to start thinking about sustainability reporting matters as well, and is very important role part of this whole entire approach and initiatives. The challenge that I always felt when I read sustainability reporting in the annual report is that the whole entire explanation and story and of it. I think at this juncture, a lot of companies are still putting in numbers and data. So for example, they put in, year out, you emit this much of carbon, but there was no story behind it. There's no story of how you capture the data, what's the comparison before and after previous year and the current year, and what's the plan moving forward as well, and how you're going to reduce, why it reduced, why it increased. There's no much story behind it. So it's just publication of data, and for us, we have pretty much left in the dark. There was one company that I looked at, suddenly the emission increases up to more than 50% that year. So, and there was no explanation or anything in that part in the sustainability report. So we had to ask, and when we asked, okay, because of expansion, new machineries, and etc., that's the reason why things blow up and it increased. I think this is something that I hope that it will shift and it will change once we have a more focused approach on sustainability reporting, particularly when we have S1 and S2 looking into climate matters as well. So I think hopefully things will get better. Of course, we can't expect companies' sustainability disclosure to, change overnight and things become extremely well within a period of time. It took us since 2015 to build this into fundamentals and take it to where we are today, and it's still a journey, and I believe it still take some time. There are few aspects that I wanted to hope to see moving forward in companies' disclosure. One of it is an emphasis on materiality alignment. It is very much important because as you're aware, in SRF 2.0, we introduced common sustainability matters where it applies to all listed companies in Malaysia. This is where, whether you like it or not, you have to disclose, for example, water emissions, and of course, even to fatalities that happen in the company, in the workforce. My concern is how companies determine what's material to them and whether certain aspects will be diluted or being removed from what they assess. That has always been my concern. Because whether you like it or not, it's interesting to see there's a lot of companies that actually had a lot of fatalities happen during that period where it was under review. I've seen numbers as high as 8. I've seen 1 to 5 commonly happening. But again, there was no story, there was no explanation, so we had to ask. We had one that, unfortunately, because there was a OSHA issues, so someone fell down the lift. We have a plantation, where they had as high as 8 fatalities. This kind of information that if not being mandated as what we had done previously, may just be buried and we may not know. And that is something of concern, because either it can create legal risk to the company, or it's just an issue with social issues that the company have to address, that can even, maybe to a certain extent, cost company in their business, as what happened to the glove industry that we had previously. So those kind of things that I hope companies will start to look into in their materiality alignment. Risk and opportunity articulation is very much important. It's about not just identifying, it's about identifying, mitigating, and also managing those risks. I think it's very much important, because it's not just about managing impact, but also it's about ability to identify and foresee, and then how you're going to then pivot and manage those risks. I think that's very much important. That's very much not being thoroughly discussed. So the concern is whether it's not being thought through, or is it not being discussed? Because if it's not even thought through, that is a very much concern. Governance structure is another thing that I wanted to emphasize, because the MCCG pushes companies to have clear identification in terms of structure of how companies are managing their sustainability matters, whether it's at the board level, whether it's a combination between board and management, or it's purely management. It is something that company have to decide and clarify. And who is actually ultimately responsible on these portfolios? Well, it's not necessary that everyone must have a chief sustainability officer, but at the very least, there's a person that is responsible to oversee and manage and move this initiative moving forward for the company. And finally, of course, is about scenario analysis and resilience. At the end of the day, on particular climate disclosure, it is very much important that companies should really look into how they are going to manage and the impact that it has towards the company. So those are some of the areas that I hope that companies will look forward and move to create better reporting and better management of sustainability matters. Ultimately, it's all about, for us as shareholders, we can push as much as we can, but so long as there are enough information that is provided to us. And we hope that this journey of improving better framework and also adopting a new framework will help such disclosures to even be better. Thank you, Simon, and I'll pass it back to you.
Thank you, Dr. Ismet. So in terms of telling more story and not having a complete information, just rather than just having disclosures of numbers, right? But the reasoning behind some of the disclosures, how materiality is being assessed, and looking at accountability, responsibility, and then I think an area that you mentioned, the scenario analysis. I think definitely that would be an area that I would like to look at too. Right. So with that, I think we have come to the end of our session, but perhaps get some parting thoughts from each of our panelists. We start with Michelle, then Dr. Ismet, Dr. Nomazila, then last but not least, Jonathan. So Michelle, any parting words? Yeah, for our participants.
Most importantly is to act now if you haven't already, and if you have, act, and continue to do so, because, it's never too late in that sense. But if you don't do something now, you're obviously going to be at the losing end. And when I say act now, most people will probably say, oh, we're obviously doing something, we're not ignoring it. But, it's not just doing the reporting or, fulfilling what is needed in terms of compliance, or setting up a sustainability, structure or community. Internalize it, understand it for yourself. And I speak for it at a board level, because many board members, and we see this as well when we do the MEP2 or the LIP classes, there's a huge mix in the class, but majority of people are still not there. So we know that's the state that we are in now, and these are PLCs. Right, majority of them are not there, but it's good because they get a sharing session. So those who have gone pretty far in their journey get to share with those who are not as far. So there's still a lot more that boards need to know, right? There's still a lot more that you need to know to even, ask the right questions. And if you talk about integrated reporting, that's even further down the road. So it's never too late. Act now, start thinking where you can start. If you have to start small, it's better than nothing. Start small. I always say start small and make a bigger impact than doing too much and not making much of an impact, right? So those are my parting words.
Thank you, Michelle. Dr. Ismail?
The EGM season is coming mid-year, and I'm sure a lot of you guys are preparing the annual report now. Of course, those who have not done integrated reporting, this is towards the tail end where you may not be able to adopt completely. But at the very least, before finalizing the annual report, why don't just have a quick look into the framework, look at it and see how you can best make changes, not editorial, but in terms of the narrative, to provide a more impactful, more constructive and better reporting for this season. I look forward to a better annual reports coming this year and years to come. And all the best.
Thank you, Dr. Ismet. Dr. Nomazila?
Yeah, actually now that we are adding sustainability, enhanced sustainability disclosure into reporting, so obviously integrated reporting is developed, as the baseline, as the foundation to enable non-financial information sustainability disclosure to be embedded. Okay, so obviously it makes more sense for you to start embarking on integrated reporting. Secondly, on sustainability and climate change, this is not just please move away from compliance mindset. Climate change is real. It's really real. In plantation, for example, last year, the output has become, I think, is less than expected because of the rainy seasons. It really affected the output of the FFB. So it's real. And we have probably will see more impact in the coming years. So we have already achieved, I think, 1.5 degrees Celsius of global warming. So it's real. Move away from the compliance mindset. and then take the opportunity. It's not just about risk. Yeah, address the risk and take opportunity as well. For example, I need to also bring this point. In Malaysia, government is really going into what we call renewable energy. The target is to achieve 70% of our energy mix by 2050. So if it's already driven by government, and now we have Energy Efficiency Act. So, and the tariff will probably coming up, electricity tariff coming up in July. So you already have seen how government is driving this agenda. So what else to wait? Okay. So I think like Misha said, you need to move forward, get the knowledge and build capacity. Thank you.
Thank you, Dr. Nomazila. Jonathan?
Thank you, Simon. And firstly, just thank you to you and to MIA for hosting this webinar today and for all the fantastic questions that you've posed and also the audience today. Three very, very quick reflections. One, I think what we've discovered is today that the quality of corporate reporting really matters. It matters to investor decision-making. It matters to employee culture, attracting talent. It matters as a sign, as a signal of the quality of your governance, of how your business is governed. We've also discovered that it costs money to do bad reporting. So why don't you commit today to do really good corporate reporting and unleash those benefits of doing high quality corporate reporting? The frameworks and standards are available for you to use as are other resources. I want to emphasize Dr. Nomazila's point. We've got to box out of the compliance mindset. Use regulation as the floor of your ambitions, not the ceiling. Use it to build on the benefits of good quality corporate reporting, using tools like the integrated reporting framework to harness the value that is there from the information that is available to your business. Organize it and communicate it. Don't just focus on compliance. And finally, use integrated reporting and S1 and S2 together, just as you're using integrated reporting and IFRS accounting standards to communicate your financial position and performance. We've got to get more efficient in how we use these standards and frameworks to drive down costs, but also drive up the value of using these standards and frameworks. It's really important. The resources are available. I know they're available in Malaysia through the consultants, through MIA, but I'm also available. I'm always available to talk to companies, to do webinars like this. We have resources and we're committed to engaging with the market. So I look forward to continuing this conversation in the future. Thank you so much, Simon, for this opportunity.